Market cycles, the key to maximum returns. I wanted to make this video. I just need everybody to understand that in life, everything is cyclical. Everything has a cycle. So it's important to understand and accept. The sooner that you accept that cryptocurrency has a cycle, the more money you're going to make in this market. So we've all heard of market bubbles, and many of us know someone who's been caught in one. Probably most of the people in the group were caught in one. I was kind of caught off guard in the beginning of one and figured out, hey, you know what? If I got to do something different, like there's more to this. Plenty of lessons to be learned from bubbles past. Market participants still get sucked in each time a new one comes around. A bubble is one of only several market phases, and to avoid being caught off guard, it is essential to know what these phases are. An understanding of how markets work and a good grasp of technical analysis can help you recognize market cycles. Even more than understanding technical analysis as a whole, I think just identifying these market cycles will help out tremendously. So you've got accumulation, markup, so this is kind of like the bull run, distribution, and markdown. Okay, so we're going to talk about this is the bear market. This is where we're at right now. Okay, so we still have to go through accumulation before markup, and it might take a number of years. The four phases of a market cycle. Most investors and traders either fail to recognize that markets are cyclical or forget to expect the end of the current market phase. When you accept the existence of cycles, it is nearly impossible to pick the top or the bottom of one. Understanding of cycles is essential if you want to maximize investment or trading returns. So let's talk about accumulation phase. I'm waiting for basically the end of the markdown phase and the beginning of the accumulation phase. So just to talk about the accumulation phase. So this occurs after the market is bottomed. I don't think we're there yet. Corporate insiders and a few value investors and early adopters, smart money managers and experienced traders begin to buy. Valuations are very attractive and general market sentiment is still bearish. We're getting close to this area. I feel that some people are starting to buy. However, look at the volume. There's still a bunch of people on the sidelines in this market. We'll talk about capitulation and what we're looking for. Those who were long through the worst of the bear market have recently given up and sold the rest of their holdings in disgust. And a lot of people in this market have been shaken out, and there's going to be a lot more that get shaken out in the future. Prices have flattened, and for every seller throwing in the towel, someone is there to pick it up at a healthy discount. We're kind of at the end of the markdown phase, waiting for the beginning of accumulation phase. Second phase to talk about is the markup phase. Or, you could call it a bull run. That's what common YouTube terminology will say. Market has been stable for a while in the markup phase. It's beginning to move higher. The market is putting in higher lows and higher highs. Recognize market direction and sentiment have changed. So you'll start to see more investors jump on the bandwagon because of greed and fear of missing out. So this market is starting to move higher slowly. In the markup phase. As this phase begins to come to an end, the late majority jump in and the market volumes begin to increase substantially. Valuations climb well beyond historic norms, and logic and reason take a backseat to greed. So this is when everything starts to go possibly parabolic real soon. Everybody's FOMOing in. Bitcoin's going to 100,000. Smart money and insiders, all the whales and institutions, they're selling. They know better. Prices make one last parabolic move, known in technical analysis as a selling climax. Prices make one last parabolic move, known in technical analysis as selling climax. This is when the largest gains in the shortest periods often occur. Sentiment moves from neutral to bullish to downright euphoric during this phase. Everybody's going crazy. Retail investors are buying in at all-time highs. And this brought a lot of us into the market. The distribution phase. So again, this is the third phase. The distribution phase this time around in crypto was not very long at all. Okay. A lot of times it's more of a flattening out. The price kind of moves sideways for a period of time. So the distribution phase, sellers begin to dominate. This part of the cycle is identified by a period in which bullish sentiment of the previous phase turns into mixed sentiment. The distribution phase can come and go quickly. You'll see a lot of classic patterns like double tops, triple tops, as well as head and shoulders patterns. Those are examples of movements that occurred during the distribution phase. It's a very emotional time for the markets. Valuations are extreme in many cases. The sentiment slowly but surely begins to change. This transaction can happen quickly if accelerated by strong negative news. Markdown phase. The markdown phase is what we've been dealing with for the past 11 months. The final phase in the cycle is the most painful for those who still hold positions. Many hang on because their investment has fallen below what they paid for it, behaving like the pirate who falls overboard, clutching a bar of gold, refusing to let go in vain because they hope to be rescued. It is only when the market has plunged 50% or more that the laggards, and in crypto, it's even obviously closer to 90%. Many of whom bought during the distribution or early markdown phase give up or capitulate. Here's what we're looking for right now. This is what I'm waiting for. A lot of people are like, Chris, you're going to miss out. Why aren't you in this market? We're looking for capitulation. That's when all the sellers are gone. Everybody gets up. We see a huge volume spike, climax sell-off. This is a buy signal for early innovators and a sign that a bottom is imminent. New investors who buy the depreciated investment during the next accumulation phase are going to enjoy the next markup. Now, here's my issue with hodling, okay? Hodling will technically work over time. However, why not buy down here and sell up here? Pull your money out, take vacation, all this stuff until you learn how to short trade and make money off a down market. And that's what institutional investors and smart money do. They play the market both ways, and that's where they have a huge advantage. So, and that's going to be basically the next step for the group. I feel like we've got a lot to learn as far as shorting the market goes, a lot to learn as far as just the right times to buy in this market. Don't force these trades. Don't feel like you have to be in this market all the time. You're not going to miss out. And you just have to know that there's so many times to enter this market. Like if you miss a 10% gain, that doesn't mean you lost 10%. That means you just missed out on an opportunity. And there are thousands, hundreds of thousands of opportunities ahead of us. Timing. A market cycle can last anywhere from a few weeks to a number of years. Remember, from one run up to the next, it took 4 years from 2013 to 2017. So that's the length of a market cycle that we have in the history as far as crypto goes. A day trader using 5-minute bars or 5-minute charts may see 4 or more complete cycles every single day. However, a real estate investor, a cycle may last 18 to 20 years, but everything is cyclical. All these markets are, okay? That's important. You've got to accept that there are cycles in markets, and that's just how it works. And there's a good time to buy, and there's a good time to hodl. You want to hodl in accumulation phase, run up to the markup phase. When it gets to distribution phase, sell, possibly short the market or take a vacation. Don't stress out. Don't hodl through a bear market. That does not work. We know this by now. It does not work. You just have to accept like, hey, you know what? The hodl mentality works, but hodl is down here at accumulation phase. Hodl here, sell here. Don't hodl here. It's a losing battle. Just to sum everything up, cycles exist in all markets. For the smart money, the accumulation phase is the time to buy because values have stopped falling and everyone else is still bearish. These types of investors are called contrarians since they're going against the common market sentiment at the time. Just because everybody on YouTube is talking about something, you don't want to do it. You want to do the opposite. You've got to go against the norm. You do not want to be part of the herd. These same people sell as markets enter the final stage of the markup, which is known as the parabolic or buying climax. You get up here and you're worried about, an extra 20 or 30%, the bottom might fall up and you might lose a bunch of money. So don't let greed take over. You've got to separate emotions from this market. The smart investors who recognize a different part of the market cycle are more able to take advantage of them to profit. We want to be smart investors. We want to be smart money. The smart money is also less likely to get fooled into buying at the worst possible time, which this market plays on emotions. And that's why it's so profitable for institutional investors in smart money, because they can see through the market cycles and they know how retail investors are going to react, and they trade against us. I just want to thank everybody for your support. Want to get this video out to you. Talk to you soon.